Fine. We will continue now. In the we were trying to understand what is accounting. We discussed about it, and we said that it's so much of activity an accountant need to do before that information becomes meaningful to the owners or all the users of the financial statement. That has collection, recording, summarizing, sorting, analyzing, preparing, calculating, everything. And then we went on to talk about what are different type of accounting. Accounting, financial accounting, financial reporting, management accounting. We discussed all this. Then now we need to understand the components of financial statement. If you happen to take, let me see if I have one. See, this is financial statement. We write the name here, financial statement. So when you say that financial statement and this type of a document, we should have it in our hands. Nowadays, we really don't need printouts because everything is on the computer, electronic versions available, and especially huge big companies, the PDF of this is uploaded in their websites. So, for example, if you want to see the financial statement of Ooredoo, definitely Ooredoo website will have that financial, because Ooredoo is a public listed company, their financial statement should be published. So it should be available to public. But for the companies like this, these are private limited company or a small organization, they cannot publicize to public and it cannot go to private hands. It should be limited to the owner and the auditors of that company. Anyhow, a financial statement has how many components we discussed in the last class? There are 5 components. 1, statement of financial position, meaning to understand the financial status of that given organization on any given particular date. Now you see here we have written 31st December 2021. So on this date, what is the financial status of this company? If you open the particular respective page, you will understand how much are the assets, how much are the liabilities, and what are the equity. Now we, from our previous studies, now we know total assets minus total liability is equal to equity or capital, or total asset is equal to capital plus liability. In both sense, the same meaning we get. So one is the statement of financial position, other one statement of profit and loss account. So what do you mean by statement of profit and loss account is that it is to understand the performance of the business for any given period. Please remember the difference between these two. The first one on any given date. Like for example, today 11th of March, if I want to prepare a balance sheet, now what's the time? 4:15 for example. Now I can prepare a balance sheet 11th of March exactly at 4:15 p.m. So that's on particular time. But for profit and loss account, not like that. So I should prepare a profit and loss account from 8 a.m. up to 4 p.m. today. So one day, it's a coverage, but the balance sheet at the end. I hope you all understood that. So profit and loss account, what it will show? It will show the performance. How much is the total sales? How much is the total expenses? And what the company is generating. Is it generating a profit or loss? If the sales exceeding the expenses, the difference we call it profit. Suppose your sales are 10,000, your total expenses 8,000, then you are making a profit of 2,000. On the other hand, your sales are 10,000 and your total expenses are 12,000, then you are making a loss of 2,000. So that is the second document. The third document is cash flow statement. As we being accountants, it is much important for us to better understand the way the cash flow statement works. Many owners, now if I ask you a question here, I have a profit